On this hot sheet, I discuss which city has the lowest inflation in the country and reactions to yesterday's CPI report. Today is Friday, August 11th, 2023. I am Byron Lazine, and the hot sheet starts now. Welcome to or welcome back to the hot sheet. If you're here on the live chat, let me know which market you're tuning in live from this morning. Hit the thumbs up and consider sharing this show with someone who wants a 24-hour look back on the housing markets. The only live daily housing show. Others may try, but we're the only ones actually doing it. The best way to support the show is share it with somebody, an agent, a lender, attorney, professional that needs to know everything about the housing market. And we could all learn something from Minneapolis, it appears. The Minneapolis area has seen an increase in rental units, and that has caused them to be the first American city to tame inflation. Okay, the Twin Cities is the first major metropolitan area to see an annual inflation rate fall below the Federal Reserve's target of 2%. We know yesterday, and we covered it on the hot sheet, CPI report came out that the nation went up year over year to 3.2 from 3% a year earlier. It did beat expectations of 3%, but Minneapolis is at 1.8%. How did they do it? This was reported back in May. There are some parts of the country, and we covered it here off of a Bloomberg piece, that are doing close to 2% on inflation, but nationwide, of course, we are at 3.2. That it's largely due to a region-wide push to address one of the most intractable issues for both Fed and American consumers: rising housing costs. Well before pandemic-related supply chain snarls and labor shortages roiled the economy, the city of Minneapolis eliminated zoning that allowed only single-family homes, and since 2018 has since invested $320 million for rental assistance and subsidies. Now, you know how I feel about only, creating opportunities for rental properties. It kind of captures people into renting for longer. This hasn't necessarily provided more opportunities for home purchasers in Minneapolis, but it has worked to bring inflation down. And maybe that's ultimately the goal. Maybe we just want to flood the market with apartments to the point where inflation is where we want it, but not necessarily people are homeowners. Not saying that that's what I want, but that's maybe what that's what our policymakers want. If we look at Minneapolis in particular, and we did this last week earlier in the week on some other of the top 200 markets. This is Realtor.com data on inventory. Minneapolis is really down. I mean, their inventory is at the lowest level we've seen, tracking all the way back to 2017. They're at a lower level than last year. That's one of the markets that's below last year, 964. Same month last year, 670 homes for sale in a given month. So it's not like this has created more opportunity for people to buy, but there's a lot to be learned and looked at, because if their inflation is down under 2%, and that's the goal, and that's what's going to get Jerome Powell to stop raising the interest rate and creating a restrictive policy on lending in our country, then we should know more about it. How is it working? Minneapolis Metro residents are spending a lower share of income on their rent because of the money that policymakers have put into creating 18,000 units per year. About 40% of Minneapolis residents' income went into housing in May. It's less than their peer metros like Portland and Seattle and Austin, Denver, Dallas, Charlotte, San Fran, Pittsburgh, Atlanta, Chicago, and Boston, all well over Minneapolis's mark. Boston, for example, it's over 60% of residents' share of income going towards rent. 6 out of every $10. It's quite a bit there, Boston. Minneapolis has seen lower rent increase. Look at this one. This one was interesting and shocking, to say the least. Rent growth across the country from 2017 and to 2023, rent growth price was up 31%. Not in Minneapolis, only up 1%. So what they're doing is certainly working to control the cost of rent. The misery rate as well in Minneapolis is among the lowest in the country. I don't know how they get this, but Bloomberg calculation using labor statistics data on misery, latest available inflation plus the unemployment rate. That's how they come up with misery. Okay, so latest available inflation data plus the unemployment rate combined. They got Tampa in a big time misery situation. I don't know. I talk to people in Tampa. They love it. They absolutely love Tampa. Miami, are you kidding me? People go maybe because it's hot right now. By the way, use code HOT to get 10% off of BAMX. You can get 10% off your BAMX membership by using the code word HOT. And maybe that's why it's so miserable misery index up in Tampa and Miami and San Diego. I think is even unseasonably hot. Riverside, Dallas is hot. So I don't know. Maybe it's just all the hot locations. Use code HOT, get 10% off of BAMX. Best place in the world to be if you're a real estate professional. But you see Minneapolis all the way down there at the bottom of the misery rate with Baltimore. But, that's interesting because Baltimore, I don't know about this misery rate, Bloomberg, because I don't know, not to beat up on Baltimore, but I don't know. I don't get a glowing review when I talk to people from Baltimore. I don't get anything too negative, but let's be real here. Okay, it's just a weird name. The housing initiatives, including the Itasca. I'm going to go with that Itasca project. You guys could be the judge of that if you're from Minneapolis. Itasca. That can't be it, but it's the alliance of the business, philanthropic, and public sectors in the region, pushing for at least 18,000 new housing units per year through 2030. So they're continuing to push forward in Minneapolis, continuing to bring more rental properties to the market. Now, this is what I keep talking about when I talk about this frustrating shelter number with the CPI. We talked about it yesterday. It's like, hey, when all of these units come online, Nashville, Houston, other places, right? And I think Houston was up there in that misery report. When these rental units come online, I'm sorry, Houston, you weren't. You were low. Okay, Houston, it was low on the misery report. There you go. You're in the bottom half. But when these rental units come online, it's going to continue to bring prices down. Now, I've got my thoughts and views on that, on what that does to keep people renting for longer. But it will bring these prices down, and Minneapolis is proving that. And they're going to continue to put more units online through 2030. They're basically saying to the rest of the country, build more affordable housing, even if it's in the rental market, and you will see inflation drop. They also show how a regional economy can get a boost when politicians are able to temper opposition to new building. Okay, you have a lot of this not in my backyard mentality. Governor Kathy Hochul from New York wanted to put 800,000 units of housing over the next decade. That deal fell apart. Rent growth in Minneapolis since 2017 is just 1%. So maybe showing that to some of these communities would be a benefit to getting them on board. There's no more effective way to rein in inflation than to expand the supply of affordable housing and increase housing affordability. Moody's Analytics chief economist Mark Zandi would agree with that. My whole thing is I would just love to see a balance between apartments. You go to the apartments every single time, and that's going to prolong problems deep into the future. I know everybody wants short-term fixes. I'm thinking about 20, 30 years out. Are we going to be able to fund entitlements in this country like Social Security? If we've got a problem with that, they say that could be bankrupt in 10 or 15 years. We could be out of money for that. Okay. Some of the pensions that could be bankrupt in the next 10 or 15 years. Because think about some of these pensions where the last 3 years of employment, you jack up your, especially some of these union jobs, you just like jack up your salary for the last 3 years. Now that's your average, right? And that's what you're getting paid for the rest of retirement. A lot of these pensions are running out of money. This isn't something like, I'm not dying on this hill. It's just a fact. A lot of these pensions are in trouble. There's plenty of data out there that you can read on it. And so don't we want people to own their own home so that they have something stable, some type of financial, asset that they can have in their life? And, I see what Minneapolis is doing. I think there's a lot of value in looking at this model and trying to figure out how to get more product onto the market, and it's working right in the short term. What's going to be the long-term impact in Minneapolis? How many homeowners are you going to have? You don't have a lot of inventory. It's very low right now, like most of the country, of course, on home purchases, are homes available to purchase. They reference this Curie Commons. It's a 187 unit complex under construction in the Harrison neighborhood of North Minneapolis, where the poverty rate exceeds 30%. A quarter of the apartments will be reserved for those making less than 30% of area median income, which is 35.5 for a family of four. The four-story property will also include a rooftop deck with a view of the city skyline and large community area. David Wellington, developer, he said such projects have more complicated finance and take longer to build than apartments with market rate rent, but we feel pretty strongly that the demand for these units is there and needs to be served, said Wellington, owner of Wellington Management. Okay, so it's really focused on the apartments. They're not doing anything that's, really, it's all multifamily. If you go through every single example here in the Bloomberg piece, it's multifamily. They're not making any of these developers go out and sell some of this product for purchase for lower affordable units. I think if this is working, okay, great. To me, next step would be, okay, out of the 18,000 units we're going to put online next year, let's find a way to get 25% of these where people can own them, or maybe 10%, then 20% the following year, then 30%. Maybe we ladder it up, because you're doing this through 2030. You're putting $320 million as residents of the state. That's your tax dollars, Minnesota or Minneapolis, that's going into this, right? Theoretically. So why not in the end, we start to build a ladder where people can own their unit, where their tax dollars are coming back to them as an owner? Would that let me know in the comments if you agree with that, with more owners of some of these properties, of these affordable units, than renters. I think we get down a slippery slope if we just push everybody into a rent. I know it's a Band-Aid fix, and hats off to Minneapolis for being at 1.8% on inflation. I'll be rooting for them to stay there for sure. Speaking of inflation, the Fed is seen to be pausing after Tame CPI data that came out yesterday. That was the consensus throughout the day. Wall Street Journal, Bloomberg, everybody kind of reporting the same thing, that this is the now new expectation based off of that report. Okay. There's also a report in the Wall Street Journal that came out off of this information that inflation and housing costs are set to turn a corner. Americans are paying more to rent or insure their homes than a few years ago, and much more to buy one with a mortgage. But there's a silver lining in the hardship here on the Journal. A cool down could help convince the Federal Reserve to pause its series of interest rate hikes. Thursday's report from the Labor Department on inflation showed that more than 90% of the increase in prices in July came from shelter. We covered that yesterday. Other big contributors were things like motor vehicle insurance. The overall rate of inflation in July was in line with the expectation. Economists polled by the Wall Street Journal, rising 0.2% on a seasonally adjusted basis, same as June. That put the 12-month increase to 3.2%. The expectation was, in fact, 3.3%, down from the multi-decade peak of 9.1% in June 22. Okay, this report yesterday is getting a lot of folks to think that the Fed will absolutely consider a pause here. Cooler July inflation opens door to Fed pause on rate hikes. That's another headline from Wall Street Journal. Bloomberg, Fed seen pausing after Tame CPI data, but mission not over. Core CPI posted smallest back-to-back gains in 2 years. Those are the back-to-back numbers. We showed this one yesterday here, showing the back-to-back numbers there all the way on the right. This is back, in over 2 years for the smallest back-to-back gain. So it's like we're seeing now a consistent trend of inflation cooling. That would lend credence to the Fed pausing in September. The market now expects a pause. You're actually seeing even those Adam Schefter reporters that are in the Fed's pocket Nick T at Wall Street Journal, I'm talking about you. He's even tweeting out July CPI could build a case for Fed pause. When he tweets it out, it's typically going to happen. My read of the data is that we have so far that we are near or perhaps a sufficiently restrictive level of monetary policy to hold for some time. This is Boston Fed President Susan Collins. So that kind of seems to be, in the last 24 hours, the theme song of what the Fed might do in September. Obviously, there's another big jobs report between now and then. Do we have two CPIs before? We might even have, no, when is FOMC's meeting? FOMC's next meeting. It's definitely September, but let's pull that up. FOMC's next meeting is September 19th to 20th. So yeah, we'll get another CPI read before that. So you get another one like we just saw here, like the Bloomberg chart is showing us, where it's back to back, and then we go back to back to back. You know, not too many. I know the Bulls did it in the 90s twice, back to back to back. Then Jordan took a couple of years off, then back to back to back. I mean, we get 3 back-to-backers here on tamed inflation. That could mean a big, big win for going into September and a pause on the rates here. We'd be looking for a third one of those on the CPI report. So last 24 hours overall, everybody's kind of, singing the same tune. We're going to have a cooler inflation or this cooler inflation report is going to lead to a pause. So let's just avoid any hot reports. Don't avoid using hot down in the BAMX coupon code down below. You get 10% off of BAMX. I also want to bring to your attention here going into the weekend. This is a really good read if you're interested in investing in your industry or just keeping an eye on these companies and watching for the dips potentially. We have a piece on BAM, roundup of real estate financial results in Q2 of 2023. We've got 10 of the largest companies and their current earnings report outlined all in one place. So I'd go read this one if you're interested. Zillow, Black Knight, Remax, OfferPad, Compass, Anywhere, Redfin, EXP, Open Door, and Real, all outlined in there. I will do some content, trying to get a feel if people want this type of content on the channel here. If they want me to break down one of these specifically, I figured I'd start with Zillow. Let me know. Would you like to see that? Would you like me to do a breakdown, a further analysis of, some of the bullet points that we've highlighted here on Zillow earnings? Be happy to do that on a one-off video on the channel. Okay, let's take a quick look at the 30-year here as we go into the weekend. We did have the Freddie Mac 30-year fixed weekly come out yesterday. That, of course, is now at 6.96 for the 30-year fixed weekly. We're still hovering around 7 on the daily. And so, we're hovering there on the 10-year, not getting much relief, but we did get it was an interesting day yesterday. Markets seem to be liking the inflation data, and hopefully that'll be a long-term thing. Use the code HOT to get 10% off of BAMX down below. Definitely join me at BAM Camp in September. If you're
the FOMC meeting.
Oh, it is. FOMC and BAM Camp same day. Oh no, that's going to be brutal on me. But we'll get it done. BAM Camp in September on the 20th. All BAMX members get 25% off. Link down below for that. Of course, love to see you there. And we also have our Tom Ferry ticket link down below as well. PR BAM SS if you're coming to that in August, or if you're thinking about it, get your last minute ticket that's coming up August 22nd. We'll have BAM Bash as well on the 22nd. I hope everybody has a great weekend, and we'll have another big week here next week starting on Monday. Until then, toodaloo.